evening to anyone who decides to tap in with me tonight. I probably won't be before you too long. I may end up just singing a song and leaving for the night. Had to go to my baritone. How are you doing? Before I get started messing around with my charts, I would like to pose. What's up, Deborah? I would like to pose a question. I'm going to put the question on the screen. So as people come in, answer this question for me. Answer this question for me. Is it clicking for you yet? Yes. Is it clicking for you yet? Let me know. Let me know. I like to jump on Al Gore's internet and just share my thoughts with people. I know you may say, like, Tim, you be popping up at weird times now. I know. Because I try to make sure I get all of my family time out of the way before jumping on Al Gore's internet. Sometimes I may do public videos. Sometimes I may do videos with the members. Sometimes I may not do videos at all. It just depends on how I'm feeling. But I always try to make sure I share stuff with the channel members, the gold and the platinum members. But lately I've just been feeling like, hey, this is just stuff that I want to share with everyone. This is the same stuff I've been sharing forever. But it's like, I just feel like somebody has not. Shout out Deborah. Everybody else, her name is Deborah. But to me, her name is Deborah. All right. I feel like somebody needs their aha moment. So I just keep getting on Al Gore's internet and I keep saying the same thing. Shout out KC. KC said not fully yet, but it's starting to. That's what's up. Congratulations, Deborah and KC. But I feel like somebody needs their aha moment. So it's not clicking for somebody. And so I keep saying this. I try to figure out different ways to say it, but it's always gonna come out to it's all about commander's intent. Take the hill. You always gotta take the hill. Now, is it clicking for you yet? I'll keep asking that throughout the whole stream. Is it clicking for you yet? Right. Let's go back up to the top. Okay, somebody tap in that wasn't tapped in before. Let's always keep going back to the top, right? So we can know where we're coming from. Top down is so important when you're trying to do anything, right? When you're trying to day trade, when you're trying to swing trade, whatever you're trying to do, coming from the top down is so important. Why? Because you want to understand what the higher time frame is trying to do, right? And until I really grasp the concept of like the confluence between the time frames, it was a struggle for me. I still struggle to this day. I'm not perfect, but it's like I have something to lean on when I find myself trying to force trades. I have something to lean on, like the understanding. Be like, Tim, lean on me when you act dumb, and I'll be your friend. It'd be like, lean on me. The understanding of what's the higher time frame, who has the mic, who's speaking. Is the monthly speaking? Is the weekly speaking? Is the daily speaking? Is the intraday speaking? Who's speaking? Who's holding the mic? I know you're probably thinking, like, what is Tim talking about? If you're not true blue gang, you're probably thinking, what is Tim talking about? But true blue gang understand me. They understand I may not be all there, but I'm all there. So on the monthly, we said that the monthly had a bullish break in market structure when we went above the August high. All right. We had displacement here. That's displacement, right? We have a balanced price range here, displacement there. How do we identify the displacement? We got the expansion, right? We got the imbalance left behind. This imbalance, expansion, imbalance, breaking market structure, right? Gives us an order block here, August and September candles. That's your order block because you came down to an area of anticipated support, right? We came undersell side, right? And then we had a breaking market structure. There's our order block. We have a monthly propulsion block here. That's just another order block that trades down into order block, and we get expansion up off of it, displacement, institutional sponsorship, right? So now that we got this institutional sponsorship, who ooh, I see 12 people on here. Put a one in the chat. I want to see. I got 12 people on here. I want to see. Up, somebody left. As soon as I said 12 people, we got 11 people on here. I want to see at least 4 people comment in the chat. Who has seen part 4 of the Learning to Trade Futures series that I posted last weekend? The institutional sponsorship video. Ready, go. Put a 1 in the chat. Ready, go. If you have seen the institutional sponsorship video, part 4. Have you seen? Have you seen part 4 of Learning to Trade Futures? Only one person put something in the chat. Only one person put something in the chat. Huh? Crying. Next up. Why are you crying? What's wrong, Deborah? Why are you crying? Have you seen a tip? Out of 12 people, only one person saw part 4 of Learning to Trade Futures. Okay. That must mean we got a whole bunch of people who must be new here. I get why you ain't. Yeah, I get it, Deborah. Okay, prayer kids. Yeah. Oh, see these names. Yeah. All right. So, out of those, what's up, Sammy? Out of those who said they've seen it, all right. Don't rush nothing, Deborah. Don't be rushing. Take your time with it. Don't be rushing. The market ain't going nowhere. Now that the institutional sponsorship has reared its beautiful head, right? What do we anticipate the institutional sponsorship to do in reference to the move that is probable? What do we anticipate it to do? Right? We got the institutional sponsorship here. Once it shows you that they're putting their money into the market to drive it up in a hurry, leaving them imbalanced there. Once we get this retracement, right? Once we get this retracement, here we come to the imbalance. We come down to the order block, right? Come to the order block. And then we anticipate price to do this, right? Attacking that high. It don't have to be a straight line, but that's the move we anticipate right there, right? Now that this is the move that we anticipate, what do we expect the institutional sponsorship to do? All right. Let's make it easy. Let's make it multiple choice. A, make it so. B, make it so. Give me what's another option? I could say make it so. Protect it. C. Let it slip. D. None of the above. Now, for those who have seen it, now that institutional sponsorship has reared its beautiful head by putting their money behind it, giving us an expansion with the displacement, there's the imbalance, there's the order block, there's the propulsion block, breaking market structure. We got all of these discount PD rays down here. All right. Now we have the retracement back into a discount, right? The retracement, we had a retracement back into a discount, and we came to discount PD array, and we repriced the only imbalance in this price leg. Now, this is the anticipated move. Now the institutional sponsorship is involved. What is the institutional sponsorship job for this probable move? This is the most probable move right here. What is his job? To make it so, to protect it, let it slip, or none of the above? A, B, or C? Put A, B, or C in the chat for those who saw the video. If you didn't see the video, you can still take a stab at it. Come on. I see 14 people. 13. Somebody got scared and left because I got some homework going on. We're separating the wheat from the tare. I have 1, 2, 3, 4 people who say they saw it. So I should have at least 4. Okay. Run said, guess, make it so. Says, make it so. Callie O says, B, protect it. Sammy says, A, make it so. B, stay above PD arrays. A, make it so. Now, if you saw the video, hey gang, what y'all doing up so late? We're working. E-Rock. Now the institutional sponsorship has shown its beautiful head in making this price move here. We've got the retracement into a discount, repriced it. This is the anticipated move. Institutional sponsorship job is to do what for the anticipated move? Make it so, protect it, let it slip, or none of the above. Answer it. Don't worry about what you mark. What I just said it. So answer the question. I just reset it. Answer the question. You know what you out there don't E-Rock. Class participation. Class participation. A, B, C, or D. All right. A, B, C, or D. Now, A. Everybody going to that make it so, ain't it? Everybody going to that make it so, ain't it? The answer is, drum roll, please. God, dog it, come here. Protect it. Stacks, protect it. So Stacks, Prayer Kid, KC, you are correct. Institutional sponsorship job is to protect the move. All right. This job is to protect the move. Why is it their job why is the institutional sponsorship job to protect the move? Because I gave you a clue, because I said they have put their money in the market to move the market in a direction. You heard the question. The question was, now the institutional sponsorship has stepped in. How do we know institutional sponsorship has stepped in? Because we have expansion. I thought make it happen meant make it happen. No. They got their, I said, what's their job? Their job is to protect it. It's to protect it. Okay, so follow me. We were here, right? And then we got this expansion coupled with displacement. Why? How do we know that? We got an imbalance right there. Price is moving in a hurry. It's displacing. It's moving quickly, right? What is this imbalance? That's something for them to use to come back into, right? They need to come back to this. It has to come back to reprice and rebalance this. So they're going to use this to come back for a reason to come back. Here's your order block right here, right? Here's your order block right here, right there. Right there, that's your order block right there. When you came up, that was the change in the state of delivery. Here, they started selling, right? They started selling, came down, right? Sold down, made a little bit of money under here from selling down to coming down here. Then price started going back up when they went above the opening price of that candle right there, that August 1st candle right there, the opening price. That's the change in the state of delivery, right? And then we got the expansion with the displacement. This right here shows you the institutional sponsorship, right? That's your institutional sponsorship, because we've gone up, got the displacement, got the breaking market structure right there. Now that's the market saying, I'm ready to go this way now. I was going this way. Now I'm ready to go that way now. Right? Breaking structure right there. So we go up, get to there, and now price starts to come back into the imbalance, comes back down to the order block. Now, like we said, we've come to the only monthly imbalance in that price leg. Right? We've come to the only monthly imbalance in that price leg. We've come down into a discount, and we've come down to the discount PD rate in the form of an order block and a breaker, right? So we got a breaker there. We got an order opening price of the order block, closing price of the breaker right there. Now we move it over. Man. Monthly counters take forever. There you go. All right. And that's now we're up. Now, so come down, discount in the discount of the move at the discount PD array. Now the anticipated move is to go there. Why? There's no other monthly imbalance down here. Right? So there's no other monthly that's the only discount monthly imbalance right there. We're at the discount PD rate. So the anticipated move to go there. Now, why is it their job to protect it? Because they put big money in to move price up to pair. What are they doing? All of this sell side liquidity that they have been soaking up down here. Right? All of this sell side liquidity that they have been soaking up down there below that low. They came below that low, and they was below that low for an entire year almost. Let's see how many candles stayed below that low. 1, 2, 3, 4, got above it, 5, 6, 7, 8, 9, 10, 11 candles went below that low at some point in time. Right. And then we took off. A lot of liquidity got soaked up down there. Soaked up liquidity for a year. And now they want to pair. They took these sell stops and they want to go pair them with buy stops. Where's the most buy stops resting? Up here. Right? So yeah, they'll take some off here above this high. Right? And when they start taking some off above this high, right? And you see here we got a rejection block there. So it's some stops inside this rejection block here, right? Because it's the bodies tell the story, the wick do the damage. So above them bodies, it's some liquidity above those bodies, right? So between here and that rejection block, start taking some off, price comes back into the only imbalance there. Now, since they put their money into pushing the market up, as it starts to retrace back, these down close, this propulsion block, this order block, this order block, this propulsion order block, this breaker, their job is to protect this move, right? Protect. That's why they left this stuff there. They say, hey, this is the price. 42.31 is the price we want to get long from, right? 42.37 even, that's our breaker, right? 41.89.25, that's our propulsion block. See, all these different little areas there, those are important numbers. Why? because they have orders sitting at these numbers getting soaked up. And then like this little, like from the high of that wick to the body of that wick, all that area right there, that's a sensitive area where they're taking orders in that whole wick right there. Why? Because they can't get in and just place their whole position like we can. They got to get a piece, and this is like, oh, we going too far. You know what I'm saying? Same thing with this wick on this order block over here. Right? As it's coming down in there, they get a piece. Give me a piece. You know what I'm saying? They coming in there. They came down, hit it, bye, went back up. Came down, bye, went back up. Came down, bye, going back up. Every time it is coming down, they just buying inside this area here. Why? Because this is this the sensitive area here. They're just taking on, you know what I'm saying, new longs, trying to get net long. And when they get back down to this order block right here, that order block and that breaker, that's the place where they're offsetting everything. When they started getting short on this candle right here, you know what I'm saying, they started getting short on this candle here, came down, took off the bulk of it down here under these lows and pushed price back up. And once price went up, any shorts that they still held on from this candle right here, from that price up, all right, we're going to make that red because they underwater right now. So when they come back to that price, guess what they're doing? Offsetting, not the wrapper, but they offsetting those, getting out of those shorts. The rest of those shorts that they had there, they're offsetting there because they done made money down here, manipulated the market up, came back down, offsetting there. Now they trying to get net long. Right. There you go. Now that's why their job is to protect it, because they've put money into making this move happen to come up here and offset all of these sell stops up here with the bulk of the buy stops, taking a little bit off here, taking a little bit off there, and taking the rest of it off up there. Right. So their job is to protect. The sponsorship job is to protect this move. Now, moving right along. Okay, get out of my way. 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 Guess I could have did it like this right here. All right. Now, so that's what we had on the monthly. Let's go to the weekly. Let's go to the weekly. All right. So, have you seen it? Is it clicking for you yet? Have you seen part 4? Protected was that? Okay. So, looking at the weekly chart. When we're talking about the weekly was in between the tail of two cities. I don't have that stuff on there no more. I get tired of looking at stuff on the chart. I'll be removing it sometime. So we had that liquidity void there, and we had that liquidity void there. I think that was the one. Come on. Yes, it was. So yeah, that liquidity void and that liquidity void, we was in between the tail of two cities right there. Right. This liquidity void pushed price down toward the monthly imbalance and discount PD array that was drawing price down. Right. The monthly was drawing price down. So this was in line with the monthly. Like this price leg to here was in line with the monthly bias, right? So when we had this displacement down, had a small imbalance right there, right? It was in line with the monthly thing. So the weekly and the monthly were in sync. So we had this retracement here, right? You were looking to get short off of that imbalance. You got institutional order flow entry drill on that weekly, and then we pushed down, got displacement down. Now that we've hit the monthly, now we don't have a monthly imbalance above us right now, right? So since we don't have a monthly imbalance above us, right, now we have to see what the weekly wants to do. Do the weekly want to get back in line with the monthly, right? You have to wait to see what the week, if we had, let's go here. If there was a monthly imbalance up here, right? If there was a monthly imbalance up here, then this weekly imbalance would be low probability. Why? Because there would be a higher time frame imbalance above it. But since there's no higher time frame imbalance above it, now we have to wait and see if the weekly wants to get in line with the monthly. Since it's monthly and weekly candles, this can take a very long time to play out. When will we know, based off what price has done right now, when will we know that the weekly is back in line with the monthly? When we take out that high from the 28th of August, the week of the 28th of August. When we take out that high right there, then we will know that the weekly is back in line with the monthly, right? Because the monthly had a bullish break in market structure. The monthly came back down to, right, and back down to the only imbalance that it had, hit the discount PD array, and then closed inside the imbalance, right? Closed inside the imbalance. The monthly is respecting the imbalance. Came all the way down, right? Came all the way down this time into the propulsion block right here. See, came down into the propulsion block, also inside the wick of the order block, hit both of those wicks, closed inside the imbalance. The next month, which is October, we pushed down, right? Came into the breaker again inside the wick of the order block, just off the open of the order block, and now we're pushing back up. And notice we opened inside the imbalance. So unless October decides it wants to turn around and close lower than 4328, right now it's still respecting the discount PD arrays. So the monthly, right, has did the retracement, and now it's respecting the discount PD arrays thus far. So that's bullish activity, right? Bullish breaking market structure, retracing back and respecting the discount PD arrays, right? So that's bullish activity. On the weekly, right? On the weekly, all of this right here was in line with the monthly because the monthly was in a bullish retracement. So bullish retracement is bearish order flow, right? So this bearish activity was in line. We got displacement down, right? Taking out a low, imbalance up here, institutional sponsorship, retrace back up, came into the imbalance, right? Didn't fill it all the way, That's exceedingly bearish. That's a good thing. Institutional order flow entry drills is exceedingly bullish or bearish. That's a good thing for the bearishness. Institutional order flow entry drill, right? Expansion and displacement again with the imbalance, right? Boom. Now that we've got to a monthly PD array, we anticipate price to possibly reverse, right? Nice reaction off the PD array this week. Bigger reaction off the PD array that week, right? Both weeks we close in respecting the discount PD array. It's showing bullish activity. It's showing bullish activity because it's rejecting off of the discounts that we anticipate that's in line with the monthly as far as like showing bullish price action. But until we get up here, we haven't broken bullish. Now, pushed up into this imbalance on this leg down, right? This is when we want to see. This is the time where we see, hey, what do we really want to do? Now, what has the weekly started out doing? The weekly has started out pushing up, right? The weekly has started out pushing up. Now, when we start out the beginning of the week pushing up, that's typically a bearish tone. Why? Because we're coming down, right? We're in a discount of the overall leg. We're in a discount from last week. So price comes out and starts to move back to a premium, right? Starts to move back to a premium to give sellers the opportunity to sell down, to keep up with the order flow. Typically a bearish move. Now, so the weekly right now is out of sync with the monthly because the monthly is showing bullishness because it's respecting the discount PD arrays, right, and rejecting off. Now, this is where it gets sticky because for the monthly to reject off, the weekly needs to go up, right? Follow me. The weekly needs to go up for the monthly to reject. Monthly to reject, right? The monthly had to come down, but for it to reject up, the weekly has to go up. Right? Now, so for the first week of October, it came down. Right? Second week and went back up. Second week of October, we went up and pushed back down to a discount on the week. Now here we go. Third week of October, we're going up. Right? So on this one here, we started out, went down, came all the way back to the top. It's red, but that's bullish activity. This one here, we started down, pushed all the way up, then pushed all the way down again. Right? That's bearish because we closed in the lower quarter of the candle. It's green, but that's bearish activity. This one here, we're starting to push up. So if we push up, right, can we come back down, make it bearish? Sure we can. Why? Because these weekly candles here, and for these weekly candles to play out, we got a lot of room on the monthly before the monthly starts to fail. Right? What are some levels where the monthly can start to fail? If you look at the entire propulsion block, 4186.75. A monthly closure below 4186.75 is showing weakness. Who is looking a little weak, right? Because that propulsion block, you want to see that propulsion block just kick price up. You don't want to see it come down the mean threshold of that propulsion block. This wick is super long, so I'm not even going to use it. I'm just going to use the bodies of the candles, right? For the order block, 39.72, right? A monthly closure below that. Oh, yes, a done data, because that's your order block. That's supposed to stop price, right? So your order, you get past your order block right there, monthly closure below your order block right there. That's giving you, taking out the sell side here, right? So you can come all the way down here. All of this right here, this is the bullishness is in trouble. So look how far you can come down before the monthly bullishness is in trouble, right? You got a long way you can go before the monthly bullishness is in trouble. So that's one sign of get worried, right? And this is your, oh, it's a wrap. So you got a long way to go. Now, inside a long way to go, you got some downside stuff down here, that this imbalance and a little bit of a fair value gap that we didn't fill in. Now, when it's bullish, like when we took off, got this bullish breaking market structure right here, that's a good thing. We didn't feel that imbalance, right? Exceedingly bullish, right? Exceedingly bullish. Now, we got all of this right here, right? This balanced price range right there. This is the only piece of imbalance that's left in this balanced price range. And then we're protecting it with what? An order block. Thus far, that weekly order block is doing its job. We got institutional sponsorship got involved right here, right? There's the order block that's supposed to protect this move here. When it goes up, right? Looking at the highs over here, this high, that high, right? When it retraces back down, that order block should protect price. So far, it's doing its job. It's protecting price. Nice rejection off of it, right? We're pushing up into this imbalance right there. Is this imbalance highly probable? Right? I'm on the fence on it. Why? Because there's no monthly imbalance above it, so that gives strength to it. That's the strongest, that's the highest time frame with an imbalance, right? That's the highest time frame with an imbalance in the premium. So this is going to draw price up to it, right? Because it's the highest time frame with an imbalance is the premium. It's going to draw price up to it. So the weekly's going up, the daily's going up, right? In order for the monthly to reject, the weekly need to go up, the daily need to go up. This imbalance is drawing price up to it. Look on the daily. The daily has had a bullish breaking market structure right there. Retrace back down into the only imbalance right there. We talked about this either today or yesterday, I can't remember, right? We came back to the imbalance and then we disrespected the imbalance, right? Why did we disrespect the imbalance? Coming back down to a weekly PD array, right? This is when we came down to the monthly. This is when we came down to the weekly. See, this is that weekly imbalance right there, right? Came down to the monthlies, Friday, Thursday, Wednesday, Tuesday, Monday, right? So last Friday, this is when we closed inside. Remember, we came down on the weekly to the monthly, then we came back up and closed inside the weekly PD array. Then the next week, we open up down here, pushed up all the way up into the daily, pushed up into this daily imbalance. It's a weekly imbalance too, I think, if I ain't mistaken. And then we came back down and closed where? Inside the weekly PD array. So we came back down to a weekly PD array, right? Closed above mean threshold. So we disrespected that daily because we was coming down into a weekly PD array. And then now here we are on the daily and we're pushing up and we took out today's high. I mean, Friday's high. We took out Friday's high. Did not go back down and take out the low, left the low, came up and took out the high. So since we took out this high, closed near the high, right? That lends to wanting to take out that high, which is last week's high. Taking out that high will complete that daily imbalance, right? That we pushed more than 50% through. Right? We closed above. Let's see if we closed above mean threshold. Nope, we didn't close above mean threshold that day. Poked above it, came down. Right. Then we closed above this high. So now looking at that last quarter of that, because we took out that high. So that high would be expected to be taken, and then that imbalance. Now, what would that give you on a weekly? Right? A beginning of the week push up to a premium, right? And if we reject off this weekly high right there, if we come up and reject that weekly high, we can fill in that, right? Coming to this bearish breaker here, right? Got a bearish breaker there. That low took out that high, right? That bearish breaker. We can't. Matter of fact, we came into that bearish breaker there. So boom, that bearish breaker has already been touched, right? So that bearish breaker has already been touched. So we can easily slide through and come to that fair value gap right here, because that bearish breaker has already been touched. Boom, hit it, sit it back down, right? So we already touched that. So we can very well come up and hit that one. So the daily has the bullish breaking market structure, came back down to the only imbalance there. Now we're starting the week out, right? Pushing higher. So starting this week out, pushing higher on the daily, right? The daily is bullish. It's got a bullish breaking market structure in line with the monthly. The weekly is trying to figure it out. But if the weekly still wants to be bearish, since it's the highest time frame with an imbalance above price right now, this is going to draw price up to it. And for a bearish week to play out, the beginning of the week on a daily needs to push higher in the beginning of the week into a premium so that they can sell it off at the end of the week. And what's above us? This weekly imbalance. All right, let's see how far that weekly imbalance goes. Let's put a high right there. Make it black. Let's go back down to the daily. Make sure we can see that on all intervals. Boom. It goes back up to a daily order block right there. Right? Daily order block. That will be like, you got here, you got this order block here, another order block, touch it, another propulsion block, you know what I'm saying? Daily order block right there. You got the expansion and displacement coming off of that to the downside, brings you back up to a daily order block. If you got to the top of the weekly imbalance, this breaker has been touched already, right? So I'm not looking for that to do much, because it's been touched already. It could very well hold, but it's been touched already. So once it get touched and it do this, boom, look at that rejection off of there. Boom, that's used up in my mind. All right, that's used up in my mind. And then we got, matter of fact, we got two back to back right there. I just noticed that right there, here and here. Right, this will be more of a mitigation block. That will be a breaker. But right there. Yeah, because you came there, pushed to there, then came there and pushed to there. So you have a mitigation block and a breaker right there. But that breaker been touched already. So that can push up there. But all of this get disrespected. Why would it be getting disrespected? Because we got a weekly imbalance. The high of the weekly imbalance is right up here. So as that weekly is drawing price up, disrespect. Yes, you could have got a quick little move pulling back down right there, but it's a high probability. What does that mean? It's going to do its job and push it back down to this low. No, it's not high probability because you got a weekly imbalance above it. So you're expecting price to draw through it, right? You're expecting price to draw through it. Now, the weekly got me in limbo right now. Got me in limbo because the monthly is fighting to get up. The daily is on board with the monthly, but for the monthly to go up, the weekly has to go up. For the weekly to go up, the daily has to go up. So that right now the daily is doing its 1-2. The daily came down, breaking market structure up, push down. Now let's push up, right? So the daily has pulled back, right? Now let's push up, continue to take out the buy side, right? Came up, took out buy side, came down. Now let's go up, take out buy side, to come down, to go up, to take out buy side. You know, the buy program is in effect. But on the weekly, right, we're starting the weekly out going up. And how would that play out with the daily? If we go up, take out this buy side, right? Let's just say we go up, right? The daily, all right, we continue to go up, take out the buy side, right? Let's just say we push up to the top of the imbalance and then we pull back down, right? Pull back down. We ain't got no imbalance there to come to. So let's just say we pull back down to an imbalance that'll be right around here and end off the week like that. Right? Let's say we end off the week like that. Let's go back to the weekly. Now, for the weekly, pushing up, right? Take care of that weekly imbalance. Then come back down. Stop right there, right? But that weekly is still fighting, right? But that'll be that on line with the monthly. It's slowly pushing the monthly up, right? So this monthly candle, that'll be the third week will be over. So it'll be like, third week will be over. So it'll be a green candle. Just say a green candle up to here with a wick on the top and a wick on the bottom. Third week over, but it's still fighting its way up, trying to get up, right? Weekly going up, starting to disrespect this PD array, right? Push through it, starting to disrespect it a little bit, but we're still closing inside it, so it's not done. But we've pushed past consequent encroachment and filled it all the way. If it's exceedingly bearish, you want to see it struggle to get the consequent encroachment and then take off to the downside. But right now, it's fighting to get up. So it's not disrespected yet, but it's starting to look that way. It can still it can still fail, right? It can still fail. Now that's the weekly, the daily, and the monthly, right? The weekly got us in limbo. The daily right now is I'm trying to be in line with the monthly, and as you see right here, look at what's going on here. Look at what's going on here. What are we doing right here? What are we doing right there? Can somebody tell me what we're doing right here? What do we call that right there? What do we call that right there? Somebody tell me what we call that right there. What do we call that right there? What I just highlighted. While I get me a sip of this high quality H2O. What do we call that? Consolidation. Thank you. Consolidation. It's not a balanced price range yet because we haven't left it. It's consolidation. It's not a balanced price range yet because we haven't left it. Remember, what validates a balanced price range is when price leaves it, right? It can consolidate all day long, but until we leave it, it's just consolidation, right? It can consolidate forever, but until we leave it, it's just consolidation. Once we leave it, that lets you know it's a balanced price range. The market, you always want to let the market tell you what's going on with price, right? But we're getting this consolidation on the daily, right? And when I attribute this consolidation to multiple things. One, I contributed to divergence. When divergence be amiss, you know, when you have stuff like the indices doing different things, you know what I'm saying? Look, these are hourly candles, but look at the charts. Look at the YM, look at the NQ, and look at the ES. You see how they look different? They you know what I'm saying? Like look at the lows and highs. See these highs right here? Let me draw a line for those who can't see it. Right. For those who can't see it. Right. That's divergence. That's divergence. When one is making lower highs, they all should be making lower highs. When one is making lower lows, they all should be making lower lows, higher highs. They all should be doing the same thing. So when you have divergence, even though these are hourly candles and these are weekly candles, but when you have divergence, we've been having divergence for a long time, right? We've been having divergence for a long time. Like the NQ and the YM, they've been at odds ever since last year, October. If y'all remember when last year, like around October, from October to like December, sometime the YM went crazy to the upside, and the NQ and the ES was dragging, and then the NQ went crazy from like February to it went crazy to the upside, and the YM was dragging, and then they've been at odds for like a year, right? But one, divergence. I contributed to divergence, right, on the indices. But then as you see, now we got like the narrative playing out on the different time frames. When you start to see a hint of it on the higher time frames, here, what's our hint of it on the monthly? Right, we've come back to a discount PD array and we're reacting off of it, right? So we're anticipating price to reverse here. Why are we anticipating a reversal here? Because we got a bullish breaking market structure backed by institutional sponsorship, right? So we're anticipating a reversal here. So when you see a hint of it on the higher time frame, lower time frame has to start playing it out. It has to start playing it out, right? So we get down here and we've come down to, let me go back to the monthly real quick. Right, so we're gonna put, so this month right here, so I'm gonna put a line there because I want to get to the end of this month and then come over and put a line there. That's like the end of the month that we in now. So let's go back down to the daily. Okay, so the first line right there, this is the beginning of October right there. So September 26th, that was the lowest day right there. Okay, so at the end of September, is when we got down to here. That's the end of September there. Let's go to this lowest low. We're gonna come over to with this one here. We're gonna go to the propulsion block on this one because this one came lower, so we giving that one to the order block. See exactly when we did this. Take this one back to the order block in the breaker right there. Okay, now let's go back to the daily. Okay, so all right. So September 27th is the day that we went back there, and then October 4th. Okay, so on the monthly, right, we came down the first time and hit the propulsion block and backed up off of it. We hit that on September 7th, and then we closed the month. Right, we closed the month above, right, inside the monthly fair value gap. So on the daily time frame, how did that play out? We came down on September 27th, hit the propulsion block, right? Hit the propulsion block over here. What else did we hit on the daily? We hit a daily order block right there. So that daily order block, and we rejected off of it. But that daily order block also lined up with the monthly propulsion block, right? And this is a daily order block there. Boom, come to the daily order block, reject off of it, and then end the month there. So end the month there. So now open up the next month, right? We anticipate price to be bullish because we rejecting off. So we open up the next month and we start going down on the daily, right? Going down on the daily, which means we're going down on the weekly, and we come back down to where the monthly breaker, which is another daily order block, right? We got another daily order block right there inside this consolidation right there. So when you got this consolidation and balanced price range, because we left it there, so we got this balanced price range, take a whole lot to cut through that, but we came back to the monthly spot, and once we hit that monthly breaker and monthly order block, right, we rally up. Institutional sponsorship on the daily. There's your imbalance. There's your breaking market structure. What makes it a breaking market structure? Because this high came down, took out that low, and hit a higher time frame PD array, right? Bounced off of it with displacement, right? Expansion, displacement. Here you go, imbalance. So now we're right here and we're ranging right there. Now we got the breaking market structure, but now we're ranging right here. So now institutional sponsorship is involved now. So if the bullishness of the daily is to keep up, now that we've got this expansion and we've got the displacement, we got the breaking market structure, we've come back down to our order block here. We come back down to the bullish order block. Now, mind you, this is the last candle of the bullish order block. So we can very well come down to that open price right there. But we want to, now that we've started consolidating right here, right? You really don't want to see it slip. It can slip down below it, right? But you really don't want to see it slip down below it. Why do I say it can? Because this is on daily time frame, right? This is on the daily time frame, and then the weekly has a weekly imbalance above it. The weekly has a weekly imbalance above it right there. So if the weekly was to push up into the imbalance and then sell back down, it could very well take out daily liquidity under there, because this consolidating is engineering liquidity, right? But you want to see the daily institutional sponsorship protect this move, right? You want to see it protect the move because they've stepped in and start to show. So you want to see these down candles here protect the move, right? Especially if we push out of this to the upside tomorrow. If this push out here to the upside tomorrow, you really want to see these down candles right here protect this move. You don't want to see price breaking back down below this candle right here. You really want to see it being stopped inside from that wick to that open. That would be, you know what I'm saying, ideal. That would be ideal if it was being held inside that range right there. That would be ideal, right? You can give it to coming down to mean threshold and all of that right there. You know, you give it coming down to mean threshold of the whole candle. That's mean threshold of the body. You know what I'm saying? You can give it to that right there. You can look at you can also look at the consolidation range right here. Looking at the consolidation range, if we expand out of there tomorrow, right? This right here, right? This will be your order block. Why? Because your order block is going to be the last down close candle at or near equilibrium, right? That's equilibrium of the range right there. You got the down close candle there. If we expand out of this area tomorrow, that'll be your order block of this right here, your last down close candle at equilibrium of the consolidation, right? And then you want to see this protect this move because the institutional sponsorship on the daily is coming in, right? So just things to think about when watching price, all kind of stuff to think about. I know it might be a lot of like stuff just to digest, but when people be like, hey, how do you do this? Matter of fact, somebody was asking me questions today. I don't mind answering questions. You know what I'm saying? Like if I could tell you sincere about your questions and you're not just trying to get me to like tell you what to do, I'll answer questions all day long. Right. Again, if you're on here, is it starting to click for you? Is reading the price starting to click for you? If it's starting to click for you, say yeah, starting to click. If it's not starting to click, say nah, I'm still struggling, or it's getting a little bit better. Put it in chat for me. Is it starting to click for you? Who all has been watching the Learn to Trade Future series? If you've been watching it, is it anything particular you would like me to cover in the series? I got stuff that I already know I'm going to do in the series, but is there anything in particular you would like for me to cover? If it is, do me a favor and put a comment on one of the videos and be like, hey, can you cover this in one of the videos? Just making it better. That's good. That makes sense because tech was down and defense stocks were up like energy. Yeah. And stuff like that. It depends on which sectors are up and which sectors are down. It can create divergence. You know what I'm saying? It can create divergence. Just say if let's just say if stuff like big companies in the Dow, like United Healthcare. I think United Healthcare is like the biggest company in the Dow. If United Healthcare is down, if tech is down, like Microsoft and Apple, I think they both in the Dow. So you got Microsoft down, Apple down. I know Apple in the Dow. I think Microsoft over there too. United Healthcare down, Apple down, Microsoft down. That's going to be dragging the Dow. Right. But semiconductors are flying. Nvidia flying. Well, Nvidia and semiconductors. What else in the NASDAQ that's not in the Dow? Just non-Dow tech is just flying. Right. So the Tesla is ripping. Nvidia ripping, Google ripping, you know what I'm saying? So the NASDAQ flying. That's gonna create divergence between these two. You know what I'm saying? That's gonna create divergence between these two. And when divergence happen between these, this the red-headed stepchild in the middle. And then that creates consolidation like this right here. That makes us we start consolidating over days like that. That's that little control they keep over the market. That's that little manipulation. Let's look at the dollar. Booyah. Look at that. When we talked about that today, when we said with a dollar, it was clear that the dollar was coming here to this low. And what was the imbalance below it right there? Is it starting to make sense now? Is it starting to make sense now? Boom. Right there to your breaker. Hit your breaker. Hit your bullish breaker. Hit your imbalance. Got a little pop off of it. Is it starting to make sense now? These hourly counters right here. It's starting to make sense now. We talked about that earlier. It was clear that's where the dollar was going. Okay, the dollar has pushed down into this imbalance here. Got close to consequent encroachment. Still have not hit consequent encroachment yet. What is this? Is this a weekly? What is that? Imbalance right there that we went through. Right. We got another weekly fair value gap that's below price on the dollar. All right, dollar ripped like crazy. Right, so the dollar ripped like crazy, came up, had a breaking market structure to the upside on the weekly. Right, breaking market structure to the upside on the weekly. Got a weekly imbalance above price right there. We've been ripping for I think we said it was like 13 weeks before we took a pause. Right, we came up here. Right back into this piece of fair value. I mean, there's fair value gap that we had touched before, right there, poked back into it a little bit and then rejected off of it. Now, so far, we had this week here taking out that low, right? We rejected, we took out that low, right? Took out that low. And then, so now, where are we going to go? Are we going to continue to pull back into this weekly imbalance down here, right? Or will we just consolidate? Remember, we say we can just consolidate here. You don't always have to pull back. You could just consolidate and let price catch up. Hey, Sanjay, get off my screen. You can just consolidate and let the other price play out and do what it need to do, right? So just watching the dollar, see what the dollar wants to do. But we got a weekly imbalance below price there. What does monthly look like on the dollar? We don't know yet, but we could be potentially forming a monthly fair value gap. So now, bear in mind now, if we got let's just say 2 weeks, because we got 2 days, a week, just say we got 2 weeks of trading left, right? We got 2 weeks of trading left. 5, 6, 7, 8, 9, 10. Yeah, we got 2 weeks of trading left. So over those 10 days, if the dollar don't come all the way back down to 104.447, we will have a monthly imbalance below price. Right? We'll have a monthly imbalance below price if the dollar don't slide all the way down to 104.447. So if you have a monthly imbalance below price, let's see what that does. Let's go to the weekly. Right. Weekly, that brings us all the way back to close to that weekly breaker right there. If we came all the way back to the low of that right there, close to that weekly breaker there, let's go find a daily breaker inside this wick right here. Because see this right here, how we come up and we come down. Let's see if we can find a daily breaker in there. Right, price comes up, boop, right there. There's your daily breaker right there. I ain't about to move it. Price comes up, right, to this over here. Poke right there, right here. This order block right there, place of anticipated resistance, comes down, right? There's your daily breaker right there. So if we create that monthly imbalance, and that monthly imbalance draws price down to it, if we get a monthly imbalance below price, that monthly imbalance should draw price down to it. So if we create that monthly imbalance with October, then price should draw down to it on the dollar, and that will bring us back to this daily breaker right there. So that would lend to the seasonality of maybe getting a third quarter pop in the indexes, right? But never put your wheel on the market. Just let the market show you what it wants to do. And how can the market show you what it wants to do? Right now, we're coming back into this daily fair value gap right here. Do I have a lot of trust in that daily fair value gap? No, I don't. Why not? Because move out of here for 10 monthly. We have a weekly fair value gap below it. So I don't trust this daily fair value gap to keep price up. Right? We've come down, taken out sell stops right here on the daily. Had a little imbalance that we repriced to up there, but we've been carefully overlapping all the way down, took out sell side, pushed back up, right? Pushed back up, created an imbalance right there, but we haven't come back up to any buy side, and we got a weekly imbalance below price. So I don't trust that to send price back up to that high. I'm looking for it to maybe keep sliding, either keep sliding or just consolidate. Why? Because that weekly imbalance is below price down there. So that weekly should draw price to it. And then if we close this month higher than this down here, what we said, then that monthly will start to draw price to it. That's what I anticipate. I appreciate y'all for hanging out with me, man. These are the things that go through the mind of little Timmy Rogers. Am I always right? No, I'm not always right. Do I get it right a lot of times? Yes, I get it right a lot of times. Do I never lose? Oh, I lose all the time. Keep my loser small and my winners big. And that's how you become a profitable trader. Shout out to Homie Robinson, man. Robinson put out a video today about DR and IDR. I could appreciate that he keep it raw and uncut. It's like he gave you the truth. He said, hey, either the day was a good day, the day was a wild day. I questioned my rules. I went against the grain. I did something I wasn't supposed to. I did everything I was supposed to. Had a good day, had a bad day. He tell you the truth. Y'all go support the man channel. Go support his channel. Share it with your friends. You know, I know he probably ain't doing it to like make his channel grow, but support the man channel, man. It take work to put these videos out, especially when you sit down and record them. That's why I always I don't say always, but I try to do mine live because it ain't no I ain't gotta edit nothing. I ain't gotta edit nothing. Man, somebody put a whole yeah. Who did that put a dissertation on? Jim Big Bird. How you gonna write that whole dissertation down there, man? That's Robinson latest video right there. Y'all click on our link and go to his page and subscribe to his page and look at his video. He got 93 subscribers right now. Go subscribe to my boy page. Click on that video and then click on subscribe and start watching his videos. And when you click on subscribe, make sure you turn on the notifications right there. Hit all. Take a lot of work to sit down and put these videos together. Wait a minute. Where the rest of the videos go? Oh, there they go. Oh, you just got one. Oh, you just got one. No. I don't know how you got this set up right here, but if you go like that's all his videos there. Like he got a bunch of videos on there. Got a bunch of DR IDR videos on there. But yeah. Go yes, he is very consistent, Iraq. Very consistent. I don't trade DR and IDR, but I can understand it. I see it. I ain't gonna hold you. A lot of times when I'm sitting here and I'm watching the charts and it's not doing what I wanted to do, I pop over and look at the DR, IDR and try to guess what Robinson gonna say he did during this video. And a lot of times I get one or two of the trades right. Some of the trades I'll be like, oh, I didn't even think of that one. But I get one or two of the trades right. I'll be like, I bet Robinson took that. I bet Robinson, oh, he probably took that and took some heat on that. Or what, so I guess one or two of them right, but I don't get them all right. Because I don't trade it, but he make it fairly simple. Anyway, that's all I got. Anybody got anything for me before I call it? Did I thoroughly confuse anybody tonight? Did I help anybody out? Did anybody get an aha moment? Let me know in the chat. I'll give it about another minute. Let me know in the chat if I confused you, if I helped you out, if you got an aha moment. If I confuse you, say I'm confused. If I helped you out, say, hey, this helped a lot. If you got an aha moment, something clicked, say aha moment. Start now. Go while I drink some water. Boys, did y'all take showers? Huh? What that? Yeah. Did you take a shower? I'm in the bathroom. All right. It's almost 12:30. Chris, did you take your medicine? Yes, sir. All right, it's 12:30. Who got the kitchen? All right, the kitchen need to get cleaned up. Deborah got an aha moment. That's what's up. Helpful. That's what's up. See what? I'm almost there. All right, then, Rochelle. We'll rewatch tomorrow. Take even more notes. Sorry, it's kind of long. Helpful. All right, Calio. Calio done changed this thing. He's standing by the bull. He done changed his little profile picture, whatever you call it. Standing by the bull. All right, man. About to go ahead and call it. I appreciate y'all for hanging out with me. It's relatively late. It's almost 12:30 here on the East Coast. For everybody who said, for the people that said they got aha moments and people who said it was helpful, just continue to do the work, man. Continue to do the work. I like to start high and drill down lower. Start what the higher time frame doing and see what the lower time frames are doing in relation to the higher time frame, and that helps with the probability. Y'all know I focus on liquidities and imbalance, so I look for where the imbalances are. Do I think imbalance is highly probable, meaning will it do its job, or do I think is low probability, meaning will price run through it? And if that imbalance does its job, then I may look to enter on it and target some liquidity in the opposite direction. If it's not If I don't think it's going to do its job, sometime I might um take a trade from an imbalance to target that imbalance. Or sometime I may wait for price to trade through it and use it as an inversion fair value gap to target the liquidity on the other side. But once you start to learn how to put the pieces of the puzzle together, like like Michael said in the building bridges video, you learn how to build the bridge. You learn, okay, I need to get there. There's a big gaping hole here. I need to get from here to there. Now I can use these pieces of the puzzle to build this bridge so I can walk across to my destination. He didn't quite say it like that, but that's how I said it in my head. So now I can use these pieces of the puzzle. Okay, I see a market maker sell model or a market maker buy model. Now that I see it forming, now I know the probability of this order block holding because I know I'm on the buy side of a market maker buy model, right? Or I'm on the sell side of a market maker buy model, or I'm on the sell side of a market maker sell model. So I know if I should be buying or selling. I know these market maker sell models and market maker buy models are going to form in between a high and a low of a price leg, of the most recent price leg. So when I see the market maker sell model and buy model start forming, see, that's what people don't understand about the concepts. You don't need to trade every concept at the same time. You shouldn't try to trade every PD array at the same time. But if you understand all of the concepts, you know how to go in and find your PD array. You know how to drill down through the time frames to find your breaker, to find your, or just like when I say, hey, let's go look in this weekly wick and see if we can find a daily breaker. You know how to drill down through the time frames to find your PD array, because the PD arrays, they like, it may be a breaker on a daily, you know what I'm saying, but it may be an imbalance on a hourly. It may be a mitigation block, or just a down close candle on the monthly. It might, it just depends on the time frame you're looking at, right? You start to learn how to understand the overall picture, and you say, this is what I'm going to trade. I'm going to trade order blocks. I'm going to trade fair value gaps. But you know where they fit in the puzzle. You know the fair value gap is going to show you displacement, and it's going to give you a point that the market will most likely retrace back into. Why is the market retracing back into this area? There's an imbalance in there. What's the highest time frame imbalance that there is? Okay, where is that imbalance in this price leg? If it's above price and I'm bearish, I want to let it get up there to that highest time frame imbalance before I start trying to sell. If it's below price and I'm bullish, I want it to retrace all the way back to that higher time frame imbalance before I start trying to buy. Because if I start trying to buy above it, or if I start trying to buy on a daily fair value gap and it's a monthly fair value gap below it, I might get bust in the head. You just learn how to connect the dots. La, la, la. That's all I got. I'm tired of running my mouth. I've been on here for an hour and 30 minutes, man. Till the next time I want to get on Al Gore's internet and talk the talk. Y'all be safe out here in these trade streets. Big Spider gone. Yep.